Hello friends. Our next topic is the cash transfers and remittances. So in humanitarian program, if a disaster is has taken place, so many people want cash so that either they can rebuild their homes or pay the installments of their loans. It creates flexibility so that the people can make their own decisions. If you inject the cash in the market, then it creates an artificial demand and supply, and the market flows, which is essential and which is good. Now, what is the benefit of the cash transfers in disaster risk reduction? That topic is being developed, and once it is, research is going on. The money can help to tackle the poor harvests or the rise in the food prices. These are shocks, and this can be tackled. And more important thing is the cash transfers can help for the social protection program. And it can help in the non-disasters time to diversify the livelihood, as we see in the table impact of the disasters on the finances, and under it the medium term response, you have to diversify, that can help there. The next thing is money transfers and the payments. E-payments is a thing that is trending these days. This is very good because you don't need infrastructure, but the problem here is the skill, the e-skill, we can say, the handling of the apps like the Paytm, or how to link with the bank accounts, your KYC, that can become a problem. While in the post elections in Kenya and Haiti, they were used extensively and they had good um, results of it. After it, the last topic is the disaster insurance. In India, we have the Fasal Bima Yojana after any disaster, and it is this is the standard method of sharing risk. See, it helps the policyholders to have some financial stability, and therefore they invest in something or any project which may be risky, which may be going to fail, but still that gives the confidence. Though it may be commercial, but in disasters that can help to protect the farmers against the crop loss. There is also a national flood insurance program in 1968, in partnership with communities and the public and the private sectors, which provided the protection. The DRR agencies is using this method of insurance to protect the most vulnerable. But is but this industry is market driven, so it has some standards which is difficult to meet for the by the poor. There are certain state insurance policies, but the premiums are higher, and which keeps the poor out of it. There is a problem of moral hazard, and where the sense of security and confidence of having insurance cover leads to people failing to take steps to reduce risk or even to take greater risk. These insurance schemes for the poor, this has helped for getting the financial sustainability rather than the profit. And means such insurance for the poor, they are run by the microfinance institutions and also the NGOs. Business are business corporate businesses are they are away from it. Here terms and conditions vary as for given by the different insurance companies. There are various types of insurances like the health insurances or the life insurances. All risk coverage for the property is rarely available. Some problem is that um, the problem is that they don't cover much. The coverage is limited with very terms and conditions, and also it take delays in settling the claims. This is because of the bureaucracy. They are slow, and sometimes the villagers or the beneficiaries they live in the remote locations, which create a problem. Micro insurance is a thing which is aimed for the low income countries. Micro insurance procedures are adapted to their client needs and capabilities. So micro insurance and microfinance are complement each other. Sorry. There is an example of the fundos, which is a micro insurance for the Mexico. But there was a problem that vulnerable farmers were not there, but they had some terms and conditions which were not fulfilled by the lower farmers. Index insurance schemes have been piloted. Another topic is the index insurance. It is in Malawi, Vietnam, India, Ethiopia. and here also some conditions have to be met, and the premium is calculated after certain calculations and the considerations. It means there is a company in Mexico which is called as the Agro Cemex, which uses a rainfall index, and it uses the type of the crop, stages in crop growth, and geographical region for calculating the indexes. And when they where there are the data was available, so the rainfall and the temperature simulation data was used. In this way we have seen the various things of the finances in the disaster. Means the insurances, the microfinance credit, microfinance institutions, what are the risks involved, how the cash transfers and the remittances are helpful, and what are the impacts. Thank you.